Hello everybody, welcome back to another video. This is going to be a nice raw, uncut video. I'm not going to do any editing on it. In this video we're going to go over exactly how I like to use the Wyckoff distribution and how I like to combine it with my own strategy. I'll give you a brief overview of my strategy and then we'll go into how I use Wyckoff to identify a good trade. Alright, so I'm going to pull up an image of Wyckoff really quickly. So I recommend printing out or drawing on one of your notepads exactly this pattern and all the phases and all the terminology for everything, okay? But you don't need to be no professional when it comes to this sort of thing, all right? So in the build up to the trade, you'll notice we had this push leg up, but it was actually downwards, so that's why I say ignore phase A. It's not actually all that important in my opinion. Okay, so ignore phase A. In this case, I believe, I can't remember, but we're going to go over it, that we had a leg that came all the way down instead of up, so that's why I don't really focus on it too much. But then we did have this build up in price, a push upwards and a secondary push upwards. So you can see we get a push up and then we get a secondary push up that goes higher, and then we got this pull back leg that came and broke below the first leg over here. Hopefully you guys can see in my mouse, so you can I can demonstrate what I'm showing you. Can you guys see that? Oh, I'll never know, but hopefully you guys are following. I'll go straight to the chart now for you guys, so let's switch back over to that. All right, and there we go. All right, so here's the trade. Okay, so what do we have? All right, so yeah, as I said, you don't worry about phase A, because if you look over here, we have a leg that comes down and not a leg that comes up. I do believe some diagrams are different and they don't really care about phase A whatsoever, so don't worry about that. So let's clear my chart. And I'm just going to bring price back to this point, okay? So, oh my gosh, I've managed to open Epic Games by clicking on that. Don't ask me how. Right, so we've got this build-up area here, all right? And then price comes down and sweeps this low, all right? So that's a good start anyways. It's not a part of Wyckoff, but always try and focus on liquidity sweeps as well as the Wyckoff distribution, because when liquidity gets built up, it becomes a stronger draw. All right, so these areas are more likely to come down to than if it was to just build up price here. Anyways, so you get overall this great big box here, don't we? All right. So built up this great area of accumulation. So price is accumulated in this area. And then you can see that price not only pushes up once higher, we get a pullback that also pushes up twice higher. All right, so I'll go over that one more time. Price creates this distribution area. We've broken up higher, and then as you can see, we pull back and then we break higher again. So that is UT and UTAD. So if you look at the diagram, go back in the video, you can see UT and UTAD happen. All right. So that build-up has formed, and then we've created that dual structural break, so to speak. All right. And then let me get rid of all this waste of space. All right. And then let me get rid of this box. You want to mark out the lowest point of that accumulation area, okay, which is here. I'll mark this out in red for you all so you can see it a bit better. And we want to see price smash straight through this point, okay? So as you can see, price with no hesitation pushes quite aggressively through this point. I'd like to mention as well that don't just trade this at any point in the day. Look at the session we are in, okay? So I live in England, so this is England time, London session time. 8 AM, which is London session open, was here. And you can see we get that nice aggressive push to the downside. So during Asia, so this is Asia session, we got that accumulation, and then price has come up and taken out a lot of the highs during Asia, which is what we want it to do if we're following Wyckoff theory. And now we've gone out to take out that Asia low. Perfect. All right. So you could just say that we're taking the Asia highs and Asia lows, but we are following critical steps during the Wyckoff distribution phases. I'm not very good at saying these kind of words. I didn't pass English in school, so I had to resit that one. Okay. All right. So price has plummeted. Okay. Now, what we want to happen is for price at some point after this break of that low area to start slowing down like this. Okay. Price can slow down and do this as well, and then we can start creating movements to the downside. But more ideally, we don't really want to see price start breaking upwards because that can damage our bias. All right, because our bias at this point is to start looking for sells. Okay, so from here we've broken down. What do we do when price is pushing downwards? We want to start following the trend and start hopping into some sells. Right, so what have we got? We want to wait for that slowdown. Okay. So there's our first area of hesitation to push further down. So that's a good start. So we're going to mark out this low point. Right, I'm going to zoom in a little bit, mark this out with a black line. Okay. So we've created this point of hesitation to push lower. We want to see that broken. Okay. So price goes and breaks it again. Right. Now we want to see another point of hesitation. So we've got a break of structure, hesitation again. Perfect. Okay, so let's mark out this low point. See how we've got 2 points of hesitation to push lower? Now we can start looking for more. I'll explain when we get to it. So let me just play price on a bit. And then here. All right. So now we have confirmed. Sorry, I'm going a bit too quickly here. So I'll start from scratch here. We've got this hesitation point that gets broken. And then you've got a hesitation point here that we also want to get broken. That's something I forgot to mention there. So notice how we've got 2. I want the second one to also be broken to the downside. And I don't want any highs to be taken. So if you take a look here, we are not taking any highs whatsoever here. All right. Perfect. So from this secondary break, we want to mark out this high here, okay? So the last high before the break is going to be our invalidation point. All right. So up here we've got an invalidation point. If price is for any reason to break past with a candle body close above this point, that invalidates all of our setups, okay? So don't continue looking for sells because there's no point in looking for sells anymore if we start taking highs out and pushing higher. Just abandon the setup and don't force any trades. All right. So I assume most of you know what a fair value gap is. There is one right here. Okay. So we've got a fair value gap here, and I want you to mark out the candle that starts the fair value gap, which is this one here. So you got 1, 2, 3 candles. This one's the first candle of the fair value gap, so get rid of that. Okay. So when price comes up to here, that's when we're going to start looking for sells. All right. But don't just sell immediately, okay? Because selling immediately is risky. You can place a risky sell here and just put your stop loss above that invalidation point, which is the high, as we spoke about before, up here. And then just clear it. And then if it gets invalidated anyways, it just counts as a loss. But we want to look for a nice aggressive push to the downside, also known as a displacement candle. So if we play price onwards here, you can see that is not a good confirmation of sells, because if you look at this candle here, this is an aggressive push to the upside in theory, because if you compare this candle to these ones, this one's outpowering the bears, in my opinion. Okay, so don't trade that. So play price onwards, still pushing up. And look, if you would have entered there and just put your stop loss just above that high, you would have been screwed. Okay, and you'll be like, oh, and this ends up being a winning trade, and you would have missed the whole move like an idiot. Alright, so if we play price on, getting somewhere, so that's a bit more convincing, but it's not quite enough for me yet. I'd like to see price break past the candle. So keep playing price. There, see? So look how perfect this candle is here. Alright, so look, we got this big candle here. Draw a box around it, just the body of it, and then drag it to this one. Right? We're quite similar. Okay, so now you can expect. So if you look at this candle and look above it, all right, give me a sec. Mark out this box. We should be expecting price to at least push down to here if we are mirroring this price action. Okay, so I'll explain that again. Got this candle push up here, and above that you've got this price action here. So we've now got our big candle, and we can expect the same. All right. Okay. So hopefully that makes sense. It's just a little theory to put behind your trade, just to know where to go break even and stuff. All right. So this is where I will enter a sell. It's as easy as that, and just literally put your stop loss. You can put it straight on the high, but I like to leave a couple of pips just above that point. All right. And then your target. I like to go for psychological levels personally. Okay, so I went for 1.3095, and that was my target point. All right, and if you play price on, so I'll get that back up for you. So if you get this measurement here from there to there, and place it from there to there, ideally you want to be going break even when price comes down to here, in my opinion, as that is a good enough push. So if we wait for price to tap into that, bring a stop loss to break even, because if price is to reflect again and come back up, then and it's an aggressive candle, for example, price will end up taking your stop loss out with that exact same measured move, if you know what I mean. Okay, so if price pumped up, hit your break even, you could end up coming up to your stop loss, so you don't want that to happen. And if you play this trade out, you can see it all goes really well, and we never end up coming back up to break even. And you can find this trade live on my short section on YouTube, my TikTok, and my Instagram. It's all on there for you all. So I hope you enjoyed that raw, uncut video. I'd like to mention I've got links in my bio to a free Discord. All of my Instagram and TikTok are down there as well. I'd like to ask you to follow them all. That helps me out. I want to help as many of you as possible with this kind of content. And if you are interested in further education, I do offer a one-to-one mentorship. I'm not promoting it, I'm just letting you guys know. I don't need people to mentor. It's not important to me. The important part of it is that I'm helping people learn to trade the way I do and profit from the markets the way I do. Okay? And if one-to-one mentoring isn't for you and you're more of a shy person, I do have a course as well. So that's all in the link in the description. And if for some reason I forget to put those links down there, you can find them all on my Instagram, TikTok, etc. So please like this video, subscribe, share with friends, and do some back testing in the markets. You might find this strategy works for you. Okay, because it most certainly works for me. So take care. Have a good day. Have a good life if you don't watch any more of my videos. Alright, see ya.